Welcome back to Boni's Life, your home for in-depth analysis and intellectual insights into the world of finance and technology. I'm your host, Boni, and today we're diving deep into the turbulent but exciting waters of the cryptocurrency market. Whether you're a seasoned trader who's been through multiple market cycles or just starting your journey into digital assets, this episode is packed with valuable information to help you navigate the current landscape. We'll be looking at the market from three different perspectives: the long-term visionary who thinks in years, the mid-term strategist who plans in weeks and months, and the short-term opportunist who thrives on daily volatility. We'll dissect the latest data from CoinGecko, CoinGlass, and other authoritative sources, analyze the global events shaping the market, and provide you with actionable strategies to trade with confidence. So, grab your notebooks, settle in, and let's get started. Let's begin with the long-term perspective. For those of you who are in it for the long haul, the big picture is what matters most. As of January 19th, 2026, the total cryptocurrency market capitalization stands at a staggering $3.23 trillion. This isn't just a number, it's a testament to the growing acceptance and integration of digital assets into the global financial system. To put this in perspective, just 5 years ago, the entire crypto market was worth a fraction of this amount. We've witnessed an incredible transformation from a niche technology experiment to a legitimate asset class that commands the attention of institutional investors, central banks, and governments worldwide. Bitcoin, the king of crypto, continues to dominate the market with a 57.5% share. This dominance is a crucial indicator of market sentiment. When Bitcoin is strong, it often paves the way for the rest of the market to follow. Currently, Bitcoin is trading at approximately $93,000, which represents a 2.8% increase over the past 7 days. While we're currently about 26.2% below the all-time high of $126,080 set in October 2025, the market has shown remarkable resilience. The past year has seen an 11.1% increase in Bitcoin's value, demonstrating a steady upward trend despite the volatility that we've all come to expect from this asset class. The crypto space itself is expanding at an incredible rate, with over 18,937 different coins and 1,457 exchanges now in operation. This proliferation of projects and platforms is a clear sign of a vibrant and innovative ecosystem. However, it also means that investors need to be more discerning than ever. According to CoinGecko's 2025 annual report, more than 11.6 million tokens collapsed due to volatility and the collapse of the meme coin sector. The year 2025 set an anti-record, accounting for 86.3% of failed projects from 2021 to 2025. This is a sobering reminder that while the opportunities in crypto are immense, so are the risks. But what's driving this long-term growth? A significant factor is the increasing institutional adoption. The introduction of Bitcoin spot ETFs has been a game changer, attracting a massive $1.42 billion in a single week, the highest since last October. Since their launch in January 2024, these ETFs have seen a total inflow of $57.82 billion. This influx of institutional money provides a strong foundation for the market and signals a growing confidence in the long-term viability of cryptocurrencies. Fidelity's FBTC fund alone accounted for $351 million of recent inflows, demonstrating the appetite from traditional finance for digital asset exposure. Furthermore, regulatory developments like the Genius Act, signed by President Trump in July 2025, are providing a much-needed framework for the industry. This was the first comprehensive U.S. regulatory framework for cryptocurrency, and it has attracted more conservative investors who were previously hesitant to enter the space due to regulatory uncertainty. The Act has shifted the regulatory approach from enforcement to industry engagement, which is a significant positive for the long-term health of the market. Now, let's zoom in a bit and look at the market from a mid-term perspective. For swing traders and those looking to capitalize on trends, the next few weeks and months are crucial. The Fear and Greed Index, a key indicator of market sentiment, is currently at 43, which is in the neutral zone. This suggests that the market is at a crossroads, with neither excessive fear nor greed dominating. This is often a time of consolidation before the next major move. The index takes into account various factors, including volatility, market momentum, social media sentiment, and surveys, providing a comprehensive view of market psychology. The average RSI across the market is at 36.2, which is considered weak. This indicates that many assets are approaching oversold territory, which could present buying opportunities for midterm traders. However, it's important to note that weak RSI readings can persist for extended periods during bear markets, so this should be used in conjunction with other indicators. The altcoin season index is also in neutral territory at 39. This index measures whether Bitcoin or altcoins are performing better. A neutral reading suggests that while Bitcoin is still the leader, some altcoins are starting to show signs of life. Bitcoin dominance has actually increased slightly to 59.14%, up 0.32%, which limits altcoin momentum in the short term. However, historical patterns suggest that after periods of Bitcoin dominance, capital often rotates into altcoins, creating significant opportunities. Ethereum, the second largest cryptocurrency, is showing incredible strength. With a current price of around $3,220, analysts are predicting a rise to $3,660 in the coming weeks. Standard Chartered has even declared 2026 as Ethereum's potential breakout year, citing improving fundamentals and the stage being set for renewed relative strength. Some technical analysts are calling for a breakout towards $4,200, thanks to a bullish ascending triangle pattern forming on the charts. Ethereum's network activity is also at an all-time high. According to Etherscan, on January 15th, the number of addresses on the network exceeded 1 million, which is more than twice last year's figures. At the same time, a new peak in daily transactions was recorded at 2.8 million. This is a strong indicator of growing adoption and utility. Vitalik Buterin himself has declared 2026 the year Ethereum reverses what he called the backsliding of self-sovereignty and trustlessness, signaling a renewed focus on the network's core values. Other altcoins like Solana and XRP are also showing promise. Solana has seen 12 consecutive weeks of inflows into its ETFs, totaling $860 million. XRP is a particularly hot topic, with Standard Chartered predicting a potential surge to $8 in 2026. The catalysts for XRP include ETF inflows and the launch of RLUSD, Ripple's stablecoin. An XRP treasury firm is even going public on Nasdaq, joining a list of crypto companies that will go public in 2026. Now, for the thrill seekers, the day traders, and the scalpers. The short-term game is where the action is, and right now, the market is a roller coaster. The recent dip in Bitcoin's price below $92,000 was a stark reminder of how quickly things can change. This dip was largely triggered by external factors, specifically the tariff tensions between the US and the EU. The crypto market cap fell by more than 3% on Monday morning at the start of the Asian session, following a sell-off of risky assets in traditional markets after mutual tariff threats between the US and the EU over the weekend. Bitcoin plunged 3.8% shortly after the opening of trading in Asia, reducing losses to 2.5% during trading in Europe. Bears are pushing their agenda, forming powerful downward momentum during the lowest liquidity periods. This allows them to form frightening candlesticks on the charts and trigger stop orders. This is a classic example of how global events can have an immediate impact on the crypto market and why short-term traders need to stay constantly informed. For short-term traders, understanding technical levels is paramount. Right now, Bitcoin is facing a key support level at $94,515 on the 4-hour chart. If it breaks below this and closes a 4-hour candle beneath it, this would signal a trend reversal on the 4-hour time frame. In such a scenario, we might see a deeper retracement toward the $84,246 level before the price regains its footing to resume the long-term bullish trend on the daily chart. On the upside, there's resistance at $95,000, $97,000, and the 200-day EMA at $99,500. A decisive break above these levels could send us back towards the $107,000 mark. Two other crucial metrics for short-term traders are open interest and liquidations. Open interest, which currently stands at $138.16 billion, represents the total number of outstanding derivative contracts. This is down 2.41% from the previous day, suggesting some deleveraging in the market. High open interest can lead to increased volatility, as large positions need to be unwound during significant price moves. Liquidations have reached $874.96 million in the last 24 hours, a staggering increase of 743.91%. This is a critical metric because liquidations occur when traders are forced to close their positions due to a lack of funds. Bitcoin alone saw $233.88 million in liquidations, while Ethereum saw $156.3 million. Watching these metrics can give you a huge edge in the short-term market, as cascading liquidations can accelerate price moves in either direction. The long/short ratios also provide valuable insights into trader sentiment. Currently, the ratio is almost evenly split at 49.09% long and 50.91% short. However, on Binance, top traders are showing a long bias with a ratio of 2.12 for positions and 2.3 for accounts. This divergence between retail and professional traders is worth monitoring closely. The 24-hour trading volume has exploded to $201.64 billion, up 99.57%. This massive increase in volume combined with the high liquidations indicates a highly volatile and active market. For short-term traders, this presents both opportunities and risks. As we've seen, the crypto market doesn't exist in a vacuum. Global events play a huge role in shaping its trajectory. The ongoing tariff tensions between the US and the EU are a prime example. These tensions create uncertainty in the traditional markets, which often spills over into the crypto space. As a result, we've seen a sell-off in risk assets, including cryptocurrencies. Gold, on the other hand, has surged to record highs, with futures reaching $4,663.21, up 1.48%. The Federal Reserve's monetary policy is another major factor. The market is currently pricing in a 95% probability of no rate cut at the upcoming FOMC meeting. The current federal funds rate stands at 3.5 to 3.75%. This removes a potential tailwind for Bitcoin and other risk assets. However, the Fed has signaled that it may lower rates later in the year, which could provide a boost to the market. The FOMC blackout period began on January 17th, so we won't hear any new guidance until after the meeting. The political landscape is also a key consideration. The Trump administration's Genius Act has provided a regulatory framework for the crypto industry in the US, which has been a net positive. Trump Media and Crypto.com are even forming a new crypto treasury, a huge bet that Trump's brand will be able to draw sustained financial interest. However, any changes in policy or new regulations could have a significant impact on the market. We also need to keep an eye on geopolitical events, such as the unrest in Iran. According to Chainalysis, Iranian residents have sharply increased their purchases of Bitcoin amid a record fall in the national currency and mass unrest. These events can lead to a flight to safety, with investors seeking refuge in assets like Bitcoin. So, how do you navigate this complex and ever-changing market? The key is to have a clear strategy that aligns with your goals and risk tolerance. For the long-term traders, the strategy is simple: dollar cost averaging. This involves investing a fixed amount of money at regular intervals, regardless of the price. This strategy helps to smooth out the effects of volatility and allows you to accumulate assets over time. It's also crucial to focus on the fundamental value of the projects you're investing in. Look at the technology, the team, the use case, and the adoption metrics. Have the conviction to hold through the inevitable market downturns. Remember, the total treasury holding of Bitcoin by institutions is now 1.73 million Bitcoin, showing strong institutional conviction. For the midterm traders, the name of the game is swing trading. This involves identifying trends and trading them from start to finish. You'll want to use a combination of technical and fundamental analysis to identify entry and exit points. The Fear and Greed Index and the Altcoin Season Index can be valuable tools in your arsenal. Watch for the rotation from Bitcoin to altcoins as dominance peaks. And of course, risk management is key. Always use stop losses to protect your capital. Consider position sizing based on the volatility of the asset you're trading. For the short-term traders, it's all about scalping and day trading. This requires a deep understanding of technical analysis, order flow, and market microstructure. You'll need to be glued to the charts and be able to make split-second decisions. Monitor the funding rates closely. Currently, Bitcoin's funding rate is at 0.0017%, which is nearly neutral. Watch the liquidation levels and open interest changes for signs of potential squeezes. This is a high-risk, high-reward strategy that's not for the faint of heart. For the next 24 hours, here are the key technical triggers to watch. For Bitcoin, a break above $95,000 with strong volume could signal a continuation of the uptrend, targeting $97,000 and then $99,500. Conversely, a break below $92,000 could trigger a cascade of liquidations, potentially pushing the price toward $89,000 or even $84,000. For Ethereum, watch the $3,200 level as support and $3,400 as resistance. For altcoins, monitor Bitcoin dominance. A decline below 58% could signal the start of an altcoin rally. And that's a wrap for today's episode of Boni's Life. We've covered a lot of ground, from the long-term vision for crypto to the nitty-gritty of short-term trading. The key takeaway is this: the crypto market is a dynamic and complex ecosystem, but with the right knowledge and strategy, you can navigate it with confidence. Remember to do your own research, never invest more than you can afford to lose, and always stay informed about both the technical and fundamental factors driving the market. If you found this episode helpful, be sure to like, subscribe, and hit that notification bell so you don't miss our next deep dive. And as always, I'd love to hear your thoughts in the comments below. What are your predictions for the crypto market in 2026? Are you bullish or bearish? Let me know. Until next time, this is Boni signing off. Stay safe, trade smart, and I'll see you in the next one.